Bitcoin has rebounded by 6% in just a few days, and altcoins quickly followed the move. In the US, the government shutdown seems to be nearing its end, while Trump is already talking about a new economic wave. Could this mark the beginning of a new bull market, similar to 2020? What's really happening right now? Who's driving the market? And what should we expect next? Let's break it all down step by step. Before we start, this is not financial advice. Everything I discuss is my personal view and judgment. Use it as an additional perspective, not a call to action. Let's begin with the main thing. Bitcoin has once again exploded upward. In my previous video, I mentioned several key support zones. The first being the psychological mark at $100,000, which we successfully held, and the second, the strong support level around $98,000. If we had broken below it, the road would have led to $94,000 or even $88,000. But the opposite happened. The market bounced sharply from that level, gaining over 6% in just a few days. Altcoins didn't stay behind either. The total crypto market cap, excluding BTC, rose by nearly 12.8%. This is not just a technical rebound, but a clear sign that liquidity is returning to the market. So the big question is this just a short-term bounce before another crypto winter, or the first signs of a major reversal? Today we'll figure out what's driving this move and whether it has any real fundamental backing. The US government shutdown began on October 1st, 2025, due to a funding failure for the new fiscal year and has now lasted around 40 days, the longest shutdown in US history. The previous record was 35 days in 2018 to 2019. The main cause this time is a political standoff over extending ACA subsidies, health insurance tax credits. The temporary Republican bill without these benefits was blocked in the Senate. Historically, shutdowns rarely break overall trends. During past closures, the S&P 500 usually hovered near zero, and 3 to 12 months after reopening, it often traded higher. The same generally applies to crypto. Despite all the negativity, the Congressional Budget Office, CBO, estimates real GDP losses from the current shutdown at around $7 to $14 billion. Some of this activity will recover later, but not all. The White House Council of Economic Advisors gave a similar scale, roughly $15 billion per week due to delayed contracts, payments, and secondary effects. The CBO also highlights key transmission channels, delayed wages and purchases, a data blackout from halted macro reports, and weakened confidence. Now, the key shift is here. The longest in history label is already confirmed, and on the night of November 10th, the Senate advanced a funding package, meaning the end is in sight, though the government hasn't fully reopened yet. Markets are reacting as usual. Volatility is easing on headlines about progress, and dips are being bought. Statistically, during a shutdown, market performance is weak and mixed. But after reopening, there's a higher probability of positive movement over the next 3 to 6 to 12 months. Still, history reminds us that interest rates, inflation, and corporate earnings are far more important for long-term trends. The shutdown itself is mostly just noise. The unique factor this time is the data blackout, a pause in official statistics releases, which adds uncertainty to models and short-term pressure on risk assets. So, we shouldn't expect a bull market to start tomorrow. Rather, we should recognize that there's some cautious optimism, which still needs to be confirmed by positive macro data once the shutdown officially ends. Now let's talk about one of the most discussed statements of the past few days, Trump's post on Truth Social. On November 9th, he wrote that every American would receive a dividend of at least $2,000, except for those with high incomes. He immediately added that this money would supposedly come from customs tariffs, claiming that the U.S. earns trillions of dollars from tariffs. Sounds loud, right? Many instantly compared it to what happened back in 2020, when the government began sending out stimulus checks during the pandemic. Back then, those payments became a true spark for the markets. Stocks, crypto, everything skyrocketed. And now some analysts are saying this could be the same story all over again. By the way, if you don't want to miss such important news, coin breakdowns, market insights, and much more, make sure to subscribe to the channel while we move on. Let's look at it realistically. First, this is a completely different market. Inflation, Fed rates, and a record budget deficit make it far from the COVID scenario. Second, for now, it's just a social media post. No bill, no confirmed mechanism, not even details on who would get it, when, or how. Even the US Treasury stated that no such program has been officially discussed, which already sounds pretty strange, doesn't it? Trump specified that the payment would be at least $2,000 per person, but let's check the numbers. According to the Treasury Department's September report, the US collected around $195 billion in customs revenue in all of 2025. If you divide that by $2,000, it covers roughly 97.5 million people. But the US population is over 340 million. So the payout could potentially reach about 1/3 of the population. And that's assuming all tariff revenues go directly to this program, which is unlikely. And even if it does happen, it's important to understand who would actually receive these $2,000. Not everyone would rush to buy crypto or stocks. For most, this would simply go toward basic needs. In that case, the market impact would be much weaker than in 2020. So, we have a controversial situation. The announcement is loud, the market reacted positively, but there's no real foundation beneath it yet. If it's just rhetoric, nothing will change. But if the check program really launches, then yes, we can expect a short-term risk-on wave and liquidity inflows into the markets. Add to that the growing optimism around the potential end of the shutdown, and we might have a recipe for a brief recovery rally. What do you think about all this? Write in the comments, and meanwhile, let's move on to Bitcoin's chart and my midterm outlook. Friends, we've already gone through all the main news: the government shutdown, Trump's statement, and the overall market sentiment. And now it's safe to say, the first signs of positivity are starting to appear. Yes, this isn't a full trend reversal yet, but the tone of the market has clearly shifted. Right now, Bitcoin is trading in a very important zone. If we break below the $100,000 level and consolidate there, the path opens toward $94,000 and potentially even lower. That would signal a deeper correction, and no one can guarantee it won't happen. But if the price holds above $100,000 and starts to consolidate, we could see a completely different dynamic. There are several interesting factors emerging in the market right now. First, the US shutdown is close to ending, which reduces political tension. Second, Trump's new proposal of potential $2,000 payouts could act as a short-term risk-on trigger for the markets. In addition, the fear index has started to climb back up, showing growing activity and investor interest. Another notable point, Bitcoin dominance is slowly decreasing, meaning part of the capital is starting to flow into altcoins. Such shifts often occur at the early stages of larger recovery phases. And while it's too early to make bold predictions, this fact alone gives some hope. One more thing, November has historically been a strong month for Bitcoin, with an average growth of about plus 42.5%. According to JP Morgan, after the recent wave of liquidations and leverage reduction, Bitcoin now looks relatively cheap compared to gold. So, there are two main scenarios. Either we see a short correction followed by an accumulation phase, or we begin forming the foundation for a new trend. But the most important thing right now is to watch how the market reacts to positive news, because that's often what sparks the next big move. Friends, thanks for watching. Don't forget to like and subscribe to the channel, and be sure to leave a comment. And remember, this video isn't financial advice, just my personal view of the market. If you want me to review your favorite coin, drop it in the comments.